Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil producer Kuwait Petroleum Corp, KPC, is in talks to shorten its annual supply deals with some customers in India and Japan to 9 months this year to meet demand from its new refinery, sources close the matter told Reuters. At a meeting with Indian refiners this month, KPC officials said the state-run company's next oil supply contracts with Indian buyers would run from April to December, the sources said, rather than to March 2022. The fourth biggest producer in the Organization of the Petroleum Exporting Countries, OPEC, said it would assess the situation in over October and November before committing supplies for the first quarter of 2022, the sources said.
The global cocoa market will record a surplus of about 100,000 tons in the current 2020-21 season that runs through to end September, the International Cocoa Organization (ICCO) said in a monthly report. That compares with a surplus of 19,000 tons which the intergovernmental body estimated for the 2019-20 season last December. A Reuters poll earlier this month forecast a surplus of 218,000 tons in 2020-21, more than double the ICCO figure, amid poor demand for the chocolate ingredient due to the COVID-19 pandemic, and good crop prospects.
Moving on to the top news in the energy sector.
Japan's overstretched electricity grid is likely to receive another Arctic blast in the coming days, which is already pushing up wholesale prices and may stress generators as they struggle to keep units running after a powerful quake. While the world's third biggest economy is unlikely to see millions plunged into blackouts as in the United States currently, the country narrowly avoided power cuts only last month in another wintry spell. Utilities and independent power providers got another jolt at the weekend when a 7.3 magnitude earthquake struck off the coast of Fukushima, northern Japan, and sent plants into automatic shutdown, briefly knocking out power for nearly 1 million people.
Oil climbed more than 1% on Wednesday as frigid Texas temperatures curtailed production in the largest U.S. crude-producing state, with the unusual cold weather expected to hamper output for days or even weeks. Brent crude LCOC1 gained 72 cents, or 1.1%, to $64.07 a barrel by 1:23 p.m. Eastern Standard Time, 18:23 GMT, while U.S. West Texas Intermediate, WTI, crude rose 73 cents, or 1.2%, to $60.78 a barrel. Oil has been supported by OPEC Plus supply curbs, Saudi Arabia's additional cuts and hopes of a demand rebound due to COVID-19 vaccinations.
Next, we have the top news in metal markets.
Gold extended its slide to a fifth session, dipping to its lowest in more than 2 months on Wednesday as bets for an economic recovery boosted the dollar and benchmark U.S. Treasury yields. Investors also awaited policy cues from the minutes of the U.S. Federal Reserve's January meeting. Spot gold fell 0.9% to $1,778.70 per ounce by 12:25 p.m. Eastern Standard Time, 17:25 GMT, having hit its lowest since November 30 at $1,768.60 earlier. U.S. gold futures fell 1.2% to $1,778.20.
Copper prices eased on Wednesday as the higher dollar prompted profit-taking, but low inventories and optimism about demand prospects due to stimulus and growth supported sentiment. Benchmark copper on the London Metal Exchange was down 0.2% at $8,390 a ton at 17:03 GMT. Prices of the metal used widely in the power and construction industries hit a 9-year high at $8,437 a ton on Tuesday. Copper inventories are low generally. Normally in China there would have been a build-up before the New Year holiday, but that didn't happen, said ING analyst Wenyu Yao. We will now look at the top news in the agricultural sector. Malaysian palm oil futures ended more than 2% higher on Wednesday, extending gains into a third session, as rival Chicago Board of Trade (CBOT) soyoil rose and the ringgit weakened. The benchmark palm oil contract for May delivery on the Bursa Malaysia Derivatives Exchange rose 99 ringgit, or 2.8%, to 3,634 ringgit $900.17 a tonne. Prices are up because of higher externals, a Kuala Lumpur-based trader told Reuters.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.